extended periods of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Way to go. Well, welcome back to the Business Insurance Zone, the talk show that spotlights insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. We're talking about individual DI with our head of our DI department, Marcy Pruitt. Hey, Marcy.
Hello, how are you?
Well, I'm a lot better now that I'm learning about disability, and the reason I'm fronting it in our show, and we've done several shows on this before, and I remember also Marcy's out on several of our educational channels on the net, teaching entry-level DI just to get your toe in the water, see if you want to play or not. I say you probably should play because we're always looking for marketing distinctions. How can I get in front of people and look different? What's anomalous on a first contact interview? Mm-hmm. And I think DI, honestly, I think it's the forgotten indemnification product.
I think it's a great door opener.
I think it is. And now that you tell me all that it does, we don't even want to use the word disability insurance sometimes. I just feel tempted to say, forget that. It's called paycheck protection, right? But we want to be, of course, compliant and salute the flag and all that. And just remember, on that note, I am not a legal or a tax advisor, so anything you hear on our show, please check out with your CPA or attorney. And, of course, if you're with your broker-dealer, always go to your compliance officer and make sure everything we're talking about, they feel comfortable with so that you can repeat it with, and not so much verbatim, but that you can repeat it with good confidence that what you're saying is true. I'm looking at our ability to write DI, and I love this last segment we did because we really mapped it out. Now, I went ahead, we mapped it out, and I'm now going to underwriting. I got my qualification, I got my prospect for individual DI. I'm ready to go based on what we said in the first segment. Now I have to see, I'm going to go through my application, and I'm looking for red flags that I'm going, what I offered, right, may not be able to go because we're going to talk about two parts in this. First is underwriting, the physiology issues, and then the secondary issue is the financial issues.
Okay.
So talk a little bit about, I'm in my prospect round, I'm doing my interview with my client, and certain things are starting to come up.
Okay. And field underwriting is so key. And with the best intentions, an agent goes out and takes the app and just had no idea that a high net worth, more varies by carrier. Traditional carriers, 4 to 6 million is more, if you have a higher net worth than that, that's not your personal residence or your business, that's a knockout. Unearned income. And alimony can count as unearned income. And agents routinely say, I'm not trying to insure that. Not only is it not insurable, it counts against what you can buy because when you're disabled, that stream of income will continue, which loses your incentive to go back to work. So is this the lines you're looking for versus health conditions or some of these things?
No, I mean, I like that. I never even thought about it. I'm looking for health, but actually now that you bring it up, I'm just like, do we have a little sheet of what you would call your knockouts? And that's one of them, alimony.
Well, yeah, I mean, short of the whole underwriting guide, and we do the training webinars to help with a crash course.
But is it a digest? Things. Do you have a digest page on this, you think?
Not really. That's something we probably could put together. Something just to be aware of, the questions to ask.
Okay, I want everyone here to just inundate Marcy on this request that she does not have.
So we'll develop
She'll develop it right away in a Word doc that we can attach and send out to you. Because I think I like knockout issues. Hey, why do I even go further?
Well, and it's true because you think, they're healthy. This is great. I have a great client. Unearned income, high net worth, working out of your home 100%. Unless if you're a W-2 employee for a corporation and you telecommute, that's different. If you own your own business and you sit in front of the computer all day, not good.
That's why I work for Brokers Alliance, so I can qualify.
And you get up and go to work every day. There's
every
accountability.
day. They make me come down here at the crack of dawn.
That's right. Hard drivers.
Oh, they are. I tell you what, the young guy's just a killer. He just rides me like a whip.
Well, so working out of the house is a concern. They like you to get dressed, go see clients. It's okay to work out of your house, but 25, 30, even 50% of the time, it's required that you leave the home and go see clients or do something.
Even in this commuter age
Absolutely.
and home businesses and employers that allow.
No, if you're if you're an employee and your employer pays your W-2, that's different. That's
okay.
Work out of your house,
That's
right?
okay.
If you're
I'm glad I
sole
clarified
proprietor.
that. Okay.
So working out of the home, the schedule. Well, we'll get into the financial.
Right. Anything about the physiology issues. I'm taking my application. I'm going through it. There's some knockout issues here. Like, just don't even. Because remember, I saw this one case. We were talking about this, Marcy. And we saw a guy get super preferred on life insurance.
Right.
And yet he was. I think it was an exclusion, and it was modified on DI, and maybe even I can't remember. It was even declined. It might have been. I don't know. But I guess I'm asking you. There's such a difference between mortality and morbidity underwriting.
Right.
So you could be really good in life and not make the DI.
Well, height, weight, and a lot of things they can deal with a rating or a reduced benefit period, but real knockout and again, there's options, but serious conditions, impaired risk. Mental and nervous drug alcohol conditions, and a lot of carriers pull your driving record. So even driving related, which is lifestyle and morals, etc. That comes into play.
Well, now I mean, like you have to obey the Ten Commandments, morals, or we're just talking about the MVR. Or,
the MVR.
Okay, I just was curious. Like, wow, they bring religion into it, maybe.
Yeah.
I don't know.
DUIs and other.
So they're looking for bad boy behavior issues,
right?
Right. Bad boy behaviors. So if you got issues like that,
right?
And I'm assuming that if you're really a good guy, you're pretty decent. You have an occasional traffic ticket. Who doesn't, right?
Right.
But if you're pretty good, you have a drink of wine once in a while. We're not talking about that.
No, and that is asked. I mean, as long typically your liver enzymes will pull that up. So the paramed blood and urinalysis will take care of uncovering your labs.
I've heard on the life side, I'm sure this is the same paramed doing the same thing, that you're not supposed to eat 14 hours before you take your exam, right?
Well, if it's required to fast, typically, right.
So, I mean, because it'll mess with your numbers. So you have to kind of set that aside, no physical activity, right? Well, no? Or
no,
no?
I don't know.
Yeah, well, for an exam, if you have to take it for life, you're not supposed to have any physical activity.
Well, see, because you're probably doing EKGs on life, and they're usually not required for
okay.
DI. So that's probably where you're going with that.
Okay. Well, see, that's why I'm saying, because a lot of our guys are more, maybe our advisors are more life-oriented.
Right.
And that's why I want to kind of make the distinction in underwriting.
Well, and we share the exam, so that's good to know for 6 months, some carriers a year. But so when you go back to deliver the life policy, if you haven't addressed the disability, now's the time.
By the way, I love that, because we talked about in one of our other interviews with you, we talked about cross-selling anyways. This is a natural, I'm coming with my life contract. That's what I feel is comfortable selling, okay? I come with my life contract. I'm delivering it. I'm going over the policy one more time to, and state why did we buy it.
Right.
I'm trying to drill it into the client. Here's the basics of why we did this. And now I have to say, now I want to bring up this other issue, and I've already taken the exam, so I'm golden there. It's just a matter of doing the DI app and bringing this up.
Exactly. And the DI app, and there's several carriers do the tele app as well. But on the medical, some of the knockout kind of diabetes, sleep apnea, real serious heart circulatory, the mental nervous drug alcohol, kidney issues, cancer.
Those are just declined.
It depending on the severity of it, but it would be highly rated and ridered. So
what about the surplus lines pick up after that if it's really that?
The surplus lines will, or Fidelity, for example, and a lot of times either through a bank loan or an employment contract or another reason that somebody has to have the coverage. So even with those conditions, there is a resource there.
So like Fidelity?
Right.
Now, what did they do? It sounds like they're in the substandard zone.
Exactly.
So what do they do now? You're not going to probably get the.
Well, it's usually a graded benefit, and it's a max of 5-year benefit period, and it's expensive, and not completely. Again, if you need the coverage or recognize you need it, or there's, you just have to have it, because they usually don't put the exclusions on. They'll cover that item, but that's why they charge a little bit more, and then it's a graded benefit for the first 3 years.
I'm just curious. In the world of DI, which you are the diva of all that is DI, how many people have to punt and go to a contract like Fidelity, which is more of a substandard carrier in DI?
Well, about the industry average is about 12% for declines. So, and you probably wouldn't really go to a Fidelity unless you were declined. I mean, because the traditional coverage is still going to give you, 2-year, 5-year, maybe even 10-year benefit period with a rating. And it's not the difference is it's not a graded policy. So with Fidelity, for example, in the first year you might get, the exact number, 60 to 70%, or 40% rather, the next year, so you'd have to be on the claim, on the product, paying premiums for 3 years before you could get 100% of the benefit.
Before you could even collect on anything.
You can collect 40% the first year.
Oh, you can?
Yeah, so it's graded years 1 through 3.
Years 1 through 3. Okay. Well, I like that because it's an option. I mean, for like people that have to have it.
Right.
And it's a little bit more expensive. It doesn't have all the perks and all the other drama of definitions that the high-end DI policies have. But hey, again, if I needed it,
you need it, right.
I like that. Now, when I think about just a little last question on surplus lines. Lloyd's of London, I was intrigued by your statement in one of our episodes that we did. You were talking about, they're big players. They play, I've always thought they were, merchant ships and, the uninsurable in life. They take the dead, the dying, the postponed, the heavily rated. But they play in the DI market. And have you seen them, have you done any cases lately with them? And why did you go to them?
Well, number one is your athletes, your entertainers. They are the go-to for that.
Now, why is that?
Nobody else will take them.
The athletes?
Yeah.
Okay.
Professional athletes, you need to go to Lloyd's. Because, first of all, they're very high indemnity contracts. You can do a $50 million contract on a player in the NFL draft. Wow. So, high limits.
The entertainers?
Entertainers.
Well, that I get.
And in addition, personal DI, they can be, tour interruption, so there's other offshoots of that in addition to the personal coverage.
So if we have advisors that are connected into the entertainment or the sports world, they could call you on a Lloyd's of London issue.
Correct.
Man, I love that. We are so big at Brokers Alliance that we're playing with Lloyd's of London. I love the enormity of saying I can go to sports and entertainment at the 50 million
There's
level.
really not a risk we can't do with the impaired and the athletes and entertainers and our portfolio of carriers.
Well, Marcy, I want to thank you. That's really great. You can call Marcy on all this, Marcy at brokersalliance.com or 1-800-290-7226 or extension 126. You can go out to our website at www.brokersalliance.com where you can get any of the quotes you need. I'm Steve Savant. You've been listening to the Business Insurance Zone. That's the buzz on the biz today. Get into the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.